Good morning, everyone. Brian Hoops here with Midwest Market Solutions. This is our Market Insider TV opening commentary on Friday. It is September the 5th. Thanks for joining us here. We're going to take a look at our trading day that was, look at our news affecting our markets here this morning and what we can expect for today's trade. I'll be doing RFD TV this morning at 8:15 Central Time. Hope you have a chance to check that out. If not, we'll be sending out the link, posting it on Twitter later this afternoon. Looking at the overnight markets, dollar index sharply lower here. So we had some non-farm payrolls numbers coming out. Unemployment numbers rose to 4.3%. Economy added only 22,000 jobs in August. That was below expectations of 75. And that's the second lowest jobs report since July of 21. So it was a poor number, but the market really didn't fare too badly with it. As you see, stock market up 16 ticks in the S&P futures this morning. Crude oil is down off that news. Natural gas is a little bit higher. And I mentioned as the dollar index is sharply lower following this disappointing numbers here from USDA on unemployment. Corn, 1 3/4 higher by the close, with beans 1/4% lower, meal higher, oil slightly lower, and the wheat is mixed, half lower. Kansas City, Chicago up 3/4 cent. Did have additional deliveries, 125 soybeans. Bean oil, 138, 3 Chicago wheat, and 8 Kansas City. So deliveries are very light, and we've not seen any corn deliveries this period. So that is a positive sign as far as corn and our overall usage. So follow us on Twitter, Midwest Markets, Brian Hoops, and visit our website, MidwestMarketSolutions.com. You can sign up for our daily newsletter, our text service as well, and find a list of our offices as well as phone numbers, email addresses, and text services there. All right, let's get into some of the news here. Just quick check of our weather here. Light rains forecast for the upper Midwest over the next 7 days. Better rains across the Tennessee River Valley areas. That'll help some of the late planted soybeans in that area, double crop soybeans. That should benefit the rains there. But for the overall for the Midwest, it's going to be very light rains, and probably won't see much in the way of real rainfall potential across the upper Midwest. Now, yesterday afternoon, StoneX came out with their new updated national corn yield and soybean yield surveys, and trade's reacting to that overnight and this morning. They do put corn yields down to 186.9 from 188.1 in August. And using that harvested acres from the USDA, production still very large, only 165 million below the USDA number in August, but 16.577. StoneX, I think, is kind of hinting with these numbers that yields are going to come down rather than increase from this level. That coincides with our beliefs that yields are too high and will come down eventually. USDA is going to have to make some adjustments. Also, they have soybean yields falling from 53.6 to 53.2 this month, with production implied at 4.257 billion, and yields just a little too high, starting to come down. That brings production, overall production, down 35 million bushels compared to last month. So our crops, big crops, are not getting bigger. They're going to get a little bit smaller, and that's what the market is reacting to this morning. Export sales out. So we're still continuing to roll from old crop to new crop. Wheat is at 11.5 million bushels, not a great number at all for wheat, but old crop corn at a negative 11 million bushels, that's marking your low, with new crop at 83.3, a very solid number. Old crop soybeans at 900,000 million bushels, with new crop beans at 30.1 million. So we are continuing to see some rolls there. That's a pretty good number for soybeans and real good number for corn overall. Our beef sales were 16.6, shipments at 11.5, and pork at 23.7, shipments at 26.6. These numbers are decent numbers for beef and for pork. Cash cattle trade developing yesterday, Wednesday and yesterday actually. And in the north, we're 242 to 243 live, 383 dress, so we're steady to $1 lower on a live basis in the north, and $2 softer dressed. In the south, we're steady to $1 better at 242 to 243. We'll probably have some cleanup trade today. But overall, the markets have a real choppy and maybe a potential top in here with cutout values seemingly topping out and the cash rate starting to stall. We saw a big drop in the feeder cattle index yesterday. There are some signs here that this cattle market is starting to crack and top at this level. A week from today, we'll have updated production numbers from the USDA, and we'll be submitting our numbers to the newswires here today. Have a great day and good luck and good trading. This has been Brian Hoops for Midwest Markets.